I'm Jubak, and welcome to my latest YouTube video, this one for August 25th. We're in the sort of middle of the end of baseball season, which is my favorite season of the year. Not summer, just baseball season. Yankees have now won 11 in a row. There's joy in Mudville, or New York, depending on which you live in. If you want more of my stuff, you can go to my free site, Jubak Picks. There are 3 portfolios on that for sort of middle, long, and dividend stocks. Or you can go to my paid site, jubakam.com, which has got 6 portfolios. Okay, so today's talk is about why Amazon's miss on earnings is a big deal for all stocks. And there was an interesting column by John Authors on Bloomberg on the 20th of August, where he talked about what he called TINA, which is an acronym for there is no alternative. That people are buying stocks because bond yields are so low and the risk of bond yields going higher, which would take down the price of bonds, is real, so that people feel there's really no alternative to buying stocks. I would like to extend that argument one step further, which is that, and I don't have any data for this, it's just a feel from observing the market, observing how people are playing, and where the money's been flowing recently, especially by hedge funds, that there is a kind of stock alternative to bonds. And it's not, strangely enough, dividend funds. It's the big technology stocks, because the idea is that these are only going to go up, and therefore they're as safe as the idea of an Apple or an Amazon or a Microsoft being as safe as Treasury is kind of a weird idea, but that's the sense that these stocks always go up. They beat Treasury yields, they beat the market, and there's really no downside because the stocks don't go down. Except, well, last earnings report from Amazon showed that not to be true. Okay, so Amazon reported a really big miss. That's tongue-in-cheek. Because when they reported earnings, they reported revenue of only $113 billion, whereas Wall Street was looking for $115 billion. Now, the stock plunged. We're looking at roughly a 10% drop on this news. The reason that you got this big drop on the news was really because, well, expectations are that was not just going to match Wall Street's forecast, but it was going to do what it always does, which is beat it. And instead what we got is a slight miss, and then some puzzling, if you will, news from the company and from competitors. One is that Walmart is really ramping up its competition with Amazon, and what they've started to do is they're going to be the infrastructure company for sales by other companies. The other thing is that Amazon is thinking about buying more retail stores. Amazon has a kind of, well, checkered past when it comes to brick and mortar stores. But there's also just the problem that if you remember way back, 10 years or so, Microsoft had a major problem, which was that its core businesses were so profitable that it found it hard to find anything to invest in that would make as much money. Amazon's got a similar problem, which is that, you know, cloud services growing incredibly fast, very profitable, but Amazon is still throwing off a tremendous amount of money. The idea that it would take some of that and put it into more brick and mortar stores after the experience of Whole Foods, which has not been exactly burning up the track for Amazon, struck people as being not sure we want to do that. If you then combine that uncertainty going forward with the fact that we just had a big revenue miss, big, you know, they did 113 as opposed to 115 in the quarter billion, plus the fact that we're looking at the second quarter of 2021 was really great for technology earnings. We had about a 47% year-over-year growth. Forecasts for the year ahead show that growth rate going down. So you've got the beginning of questions about whether these stocks are indeed an alternative to bonds and whether this is the place to put your money. That hedge funds really put a lot of money into Amazon just before this collapse. And this collapse, wiped out, 267 billion in market cap. A bad time to do that. Going forward, I think the question now is, after Amazon, what? Because Amazon by itself won't really change the complete orientation toward these stocks. So here we have Microsoft, which has been on a tear, you see, and then has started to level off. And that's really because, well, you get this kind of acceleration, and then you got to go, well, what else is up? And the real question here is whether you're going to get another leg up in this stock. If so, I think then the attitude toward this whole group of stocks, I think, remains the same, and it becomes, this is the place to put your money alternative to bonds. That will become clear as we move into the December quarter, which is a big quarter for Microsoft. It will become clear as we move into the third, and we move into the September and December quarters for Apple. Particularly whether we get an acceleration. You notice Apple's been kind of, not going anywhere. This is a nice base building, maybe. But Apple's got its September product announcements, which almost always supercharge the stock. New iPhone, new operating systems, all that stuff. So, and then the fourth quarter, the December quarter, is always the biggest one of the year for Apple. So if we get that pushing the stock back up, then I think we'll have, well, maybe investors saying, well, yeah, Amazon, maybe not where we want to put our money, but we've still got Apple, we've got Microsoft, we've got Alphabet. So I guess what I'm saying is that after Amazon, the question is whether we see Microsoft and Apple announce results or show stock momentum that really makes people say, oh, Amazon was an anomaly. I can still continue to put my money into these big tech stocks and they will outgrow everything else and they're safe as treasuries. If, however, on the other hand, we see the Microsoft leveling off, continue for a while, and we don't see a big bounce out of Apple after the September announcement, then I think you've got the possibility for more doubt arising around this whole group, especially because forecasts show growth, the rate of growth moderating for them. So that's what I would be looking for in these, and that's why I think the Amazon miss was a big deal for all stocks. Thanks for watching. This is Jim Jubak. Please, if you like this video, like it, subscribe so you get more notifications of the videos. You can go to my free site for 3 portfolios. That's jubakpicks.com. My paid site, jubakam.com, which has got 6 portfolios. Thanks for watching.